Okay, and we are live.
We are live. We are live and we are alive. All right. Thank God we are alive. All right. Let me go to Facebook.
Okay, hi everyone. Hello.
Let me go to Facebook.
If you can hear us, just to make sure you can hear us, please type where you're from, which country you're from. We have FAIZUL, Faikiat, and Sean.
Yes.
Okay, got it. It's already mid of quarter three, right? Yeah. Know where you're from and also what questions you have regarding property, stocks, or even chili farming. Faikiat is in the chili farming.
Okay, let me share this first. I share first. I want to be the first to share.
Chili farming has been a very hot topic.
We have Sean Andrew Michael from Singapore. We have Aman from India. The comments are on this side, guys. So you all can click the live comments. You can see the comments coming in. And yeah, keep your questions coming in. What are you guys doing right now? Okay, Faikiat. So, wow, feels like deja vu.
All right. Okay. Give me a second. I just shared on my... Oh, this is my watch party already. Okay, great.
Ask your questions.
All right, guys, very quickly. So we have three gentlemen here, myself and these two handsome guys. So a very quick intro for very quick intro. Okay, let me go back to my notes. All right, it's going to be a very powerful session. So my name is Faikiat Luari. Hi, hello. Why, nice to see you guys. So very quickly, my name is Faikiat Luari. Easy to remember, Faikiat. So I'm an Albanian, but been living in Asia for many years. And tonight it's really an honor for me to be here with these two gentlemen, because it's not easy to get these two guys, right, to share what they know about the market, about property, about stocks. And and actually I'm literally their students, I'm still learning from these guys. They are amazing. So I strongly will advise, for those of you who are here right now, please take a paper and pen to take notes, okay? It's going to be an incredible session. Also very light and easy, and in a sense that, we are encouraging you guys to ask questions, okay? So for those of you to this, let me very quickly introduce our speakers for today, right? So I'll start with Sean first. Sean SEAH from Singapore. Any Singaporeans here? All right. Don't play, he's a Singaporean. Singapore, yes. All right. Okay. So, who is Sean? Okay, I've known him for a number of years. Of course, the first time I met him was in Singapore. Sean remembers or not? Oh, thank you. That's nice, and nice effect. Then in Malaysia, in one of the huge conventions attended by thousands of people. So he's known, guys, as, guess what? He's known as, let me show you. I just borrowed this from my son. Bang! One punch. Another was three punch. Sorry, he's known as one punch investor. Watch it, Sean. Watch it.
Okay, can.
By the way, my son's one is better than yours.
Definitely, no doubt.
Huh? Definitely, my son's one is better than yours. So he's known as one punch investor. Well, this guy is crazy guy, he went viral for what he did, but that's another story. Very quickly, right? He started 3 companies and he sold one of the companies for 10 million. 10 million, not rupiah, 10 million Singapore dollars, right?
Yeah, Singapore dollars. Right.
10 million Singapore dollars. He sold one company, right? He's the best-selling author of 7 Secrets to Investing Like Warren Buffett, okay? 7 Secrets to Investing like Warren Buffett, a book that he co-authored with Mary Buffett. So some of you have been following the gang, right? You know, Mary Buffett is the former daughter-in-law of Warren Buffett. I had the honor, the pleasure of interviewing her as well. Wonderful lady. Sean is one of the leading experts in value investment, guys. So please, any questions that you have about value investment, Warren Buffett way of investing, stock market, all right, internationally, yeah, he is the man tonight. He's the man that we're going to drill tonight, all right. Now, he has taught thousands of students who benefited and built their wealth through stocks, all right. So later on, we will talk more about that. So in a nutshell, this is Sean, my good friend from Singapore. Now, the other super handsome guy down there is FAIZUL, all right. This is truly buatan Malaysia man, okay? He's my Malaysian kaki here, my Malaysian friend, all right? He's a great guy. Now, be careful what I'm going to say next, huh? Be careful what I'm going to say next. He's known as WTF. So watch out, huh? I still don't know what WTF stands for. I'll leave it to FAIZUL, but it can be very dangerous, huh? WTF. WTF, analyst, investor, okay? But this guy is also an amazing guy, like, okay? He's the CEO of FAR Capital. He's a leading property advisor and community in Southeast Asia. Guys, if you really know, because I got to know him, his right-hand man, I got to know the team, and we are doing some things together. If you really know what FAIZUL is doing, not just in Malaysia, even in the other countries, the community he has built, guys, seriously, you must pay attention, okay?
Yep.
This is a session you don't take for granted, okay? You don't take for granted. He's one of the Malaysia's most influential young entrepreneurs who became a property tycoon by the age of 30.
Okay.
If I'm not mistaken, you got like 23 properties by the age of 30, okay?
I did, yeah.
Yeah, I used to brag. It's like, wow, I got like 10 properties, like big deal. This guy got 23, man, at the age of 30, okay? So that's why I say you guys have to really pay attention tonight. It's really amazing, okay? And now he is the largest, guys, listen, he has the largest property buyer community in Malaysia with thousands of students under his mentorship, whom he had helped to acquire properties and create wealth for them. So guys, come on, show some love. I guarantee you that tonight is going to be an awesome, awesome session. So please, you know by now that this session will benefit you a lot, and it's going to benefit somebody else. So I ask you to please share it right now. So please share it right now on your Facebook. Please share it right now, please. Just do it, okay? Just do it, okay? So, are we ready to go?
Well, anytime. Let's go.
Anytime, yeah.
So where do we see the comments? Do we see the comments in the Facebook, or we see the comments here on the Facebook, right?
You can see the comments on the right side. If you look at the right side, there's a live comment. You click on the button, and yeah, I get many questions for FAIZUL. A lot of questions about property, about how he's investing, and some of the questions may not be friendly. Are you ready for that, FAIZUL?
I mean, like, you know, I don't expect an easy question. I love speaking to the international crowd. They don't hold back, so that's good.
Yes,
yeah,
because I think when we arranged for this, FAIZUL mentioned one thing. He said, "Hey, Sean, no holding back, unfiltered." So I do have a lot of questions about the sustainability of a certain way of investing. Okay, let's go, man. Let's go.
Let's do it. Can I start first?
Yeah, please do.
Okay, I'll throw in the first questions to you guys. Sean, you start the ball rolling and let FAIZUL give his input, yeah? So one of the first questions, we start a bit general, then we zoom in more specific, yeah, guys? So let's start with this. Let's talk a little bit, guys, about current market valuation, okay? This is something that I think your input will be very valuable for us who are watching right now. So current market evaluation. Of course, Sean, you focus more on your forte on stocks and the economy overall, and I believe FAIZUL will touch a lot on the property side.
Okay, got it. Okay, maybe I just share some slides very quickly. You can see currently this is the Dow Jones Industrial Average, meaning to say it's the US stock market, okay? How many of you guys invest in stocks? If you invest in stocks, can you please type stocks? Otherwise, type I am not okay, or type something else. Okay. Anyway, I just want to share something. If you can look at the stock market right now for US, okay, it has gone back to the levels of last year, as if COVID never happened. Now, meaning to say, right, if you read the news, they say that technically we have recovered from a bear market. The bear market happened this portion in time. When we talk about bear market, it means that the market went down. It went down. And ever since it went down, right, it recovered very steadily and quickly to a point where it's similar as last year. Meaning to say bear market is over. Historically, this is the fastest bear market ever. It only took, I think, less than about half a year to recover fully. In my opinion, this is overly optimistic. But I want to share a few things. The reason why the whole entire market is swinging up, right, there are two key factors. Number one, right, it is the government printing money, at least in US. I'm talking about US, but you must understand something. The US market represents quite a lot of psychology of many people in the world. Later, I'll show you like even Malaysia market, Singapore market, they pace US accordingly. So money has been poured in by every country. The funny thing is this, I feel that the economy is a little bit haywire. When government give you money, they want you to spend, right? So I don't know for the gentleman here, right? When government give people money, how do you expect people to spend the money? What do you think the government wish the people spend on? Can you all please type? Please type. What do you think the people wish the government wish that the people spend on? Typically spend on spending things like to boost businesses, correct? Maybe to buy more things, to buy more food, to buy things, to go out, watch movies. Singapore, they even have a package. Please go and visit a zoo, boost businesses. But instead, a lot of people take the money, go and spend in investing. They go and buy stocks. But you see, when you take the money, go and buy stocks, instead of buying things from the economy can't recover that quickly. The stock market went up because money was poured into it. Who is pouring in the money? Based on the latest BBC news, right? They also interview a lot of investors, seasoned investors. Many seasoned investors, they are not willing to pour in a lot of money. Like Warren Buffett, like a lot of fund managers, BlackRock, they are holding money. So who is driving the stock market is by a lot of retail investors. So this is the key indicator to tell you. I feel that it is not supported by strong fundamentals. But is there opportunity right now? Answer is still yes. The thing is, right now, the market is a little bit riskier. Meaning to say, if you want to make money, you have to be a little bit more knowledgeable. Actually, not a little bit. You have to be a lot more knowledgeable. This is a normal stock market. Look at the tech market. If you look at tech market, technology stocks, right, already surpassed last year already. But I think that if you talk about technology market, it makes a bit more sense because of COVID, technology is a bit better. So in my opinion, right now, the investment market and the economy, there is a difference and there's a bubble right now, in my opinion. What is happening right now in the property market, FAIZUL? Like this is what's happening in the stock market for US. Yeah.
I think for the property market, we are actually looking at a recession. So like every other recession, the demand towards property will tend to go down, right? Historically, whatever we have seen in the investment space, whether it's equities or properties, in the last couple of months post-COVID, it's not something that we have seen in the past. So suffice to say, there's no real playbook that has basically indicated that this is historically something that has happened, at least in the last 6 months. Because whatever you see here, it doesn't make sense. In fact, for example, I've been investing in property since 2005, and this is my 15 years of doing it, right? And this year is the only time I've been telling all my students, if you have cash, don't go buy property. So guys, I'm a hardcore property investor, and I'm telling my students, if you have cash, don't bloody go use the cash to go buy property. So what you do here is that you take the cash and you should look at equities in the next 12 to 24 months, right? And as far as property is concerned, at least in Malaysia, we're basically buying things at 100% loan. So simply because of what market sentiment is, Malaysia is going to drop to a 20-year low in terms of property transaction this year, I think according to my forecast. And therefore, and we have quite a fair bit of supply in certain areas, and in some of these areas, as of today, we're actually buying property at a 55% discount, guys. So my mortgage on a 70% versus market value is actually 120, 130% against the actual net purchase price. So for example, value is 1 million. I'm now getting it 450,000, but my mortgage is 600 over 1,000. Right? So my mortgage is more than the actual net value of the property. And here's the best part: my cash flow not only can break even, I can actually get cash flow positive. So which is why rarely, I've never given this advice in the last 15 years, but I'm telling everyone I know, if you have cash, preserve it, keep it, right? And you should buy things that will do well in the short run. And I think, I've been following a lot of RIDZUAN videos in the last couple of months, and he's been talking about this particular concept of storeholder of wealth. So typically every crisis, and this crisis is completely different compared to 2008, 2009, simply because the record amount of money being printed surpasses the QE in 2008, 2009 by at least 4 times, right? So last time it was 700 billion US dollars, and today we're looking at 3 trillion in the first 6 months.
Wow.
Right? And that's why, for example, even, I consider Warren Buffett as my biggest mentor in property investment. The guy doesn't buy property, but I literally copy and stole his move in equities and apply it to property, and has worked wonderfully for me. So similarly, we look at the same things. We look at intrinsic value of the property, versus the market value and the valuation, right? But one thing is for sure, right? Because of priority of all the government right now, I would say 99% of the government in the world right now, because the international borders are closed. So tourism is completely gone for the next 6 months and for the next 12 months. So, for example, you're gonna see small openings like Malaysia, Singapore, whereby 2 countries who have got it together in terms of controlling the virus might open the border, right? With some level of restriction. But will we be able to go to Indonesia in the next 6 months to 12 months? I don't think so. Their cases have gone up by a couple of thousand on a daily basis, right? So with that, you see, there's a level of domestic push in Malaysia is a pretty big deal right now. The Malaysian government is pushing for domestic tourism and domestic spending, and as of today, as far as June is concerned, while our Q2 has basically retracted by about 17%, worst in history. But actually, if you look at the numbers closely, our June number, because Q2 is April, May, June, right? Our June number were only 2% off versus June last year. So we're looking at a V shape. So that's what our finance minister is looking at. So I think we're quite optimistic. What is for sure, while the crisis is different, the outcome tends to be the same. You have globally, stupendous amount of money being printed, right? Globally, right, by all countries and all governments, right? In order to make sure that we don't go to a depression, they are encouraging people to spend. That means the value of money is the real question. What is the value of money? And the popular storeholder of wealth, because there's just so much money going everywhere, which is why you see now an uptake in terms of equities in Malaysia, for example. We're already entering a technical bull run. We are in a recession, economically speaking, but the equities market already entered a technical bull run, right? So that doesn't make sense. But then again, equities has always been a forward indicator of how well the economy is doing and the confidence towards the economy is doing. And last week, for example, for the first time in the last 25 weeks, we have a net purchase inflow of foreign funds. So the foreign funds are now back after 4 months of, 6 months of, waiting and see. So we're predicting that for the next 2 to 5 years, for example, the next 12 months, I think there's going to be a lot more upside on the equities. But after that, as usual, typically like every other Asian country, the moment you start making money from stocks, they will actually go to hard assets like property. So property tend to be, if you look at 2008, 2009, we had a crisis for 2 years. And then after that, Malaysia had a property bull run for 5 years. So I think similarly, it's basically happened in Singapore as well, right? So the moment you have cheap interest rate, a lot of money being printed and people are being careful, but the next couple of years, people will still need to invest. And therefore, like I said, we are predicting property bull run for the first time in the last 15 years. We're making that prediction today.
Just also, I got a question. Can I ask a question? Can I? Okay. So
Please.
no, actually, it's a very interesting psychology or like a way of investing. Initially, stock market will increase. I mean, it's always a slightly leading indicator because it shows confidence in the people. And when people are confident in the stock market, typically the economy will start to improve. Economies don't improve because of the lack of confidence. So stock market shows confidence. Now, as the stock market increase and they go higher and higher, is there any indicator when people will start to switch from stock market to property market? Reason being, actually, the stock market is pretty high right now. It is not, in my opinion, there is no fundamental supporting it. So will there be a switch very soon based on your own experience?
Good one.
So for me, the main question here is that, for example, if you look at Dow Jones, or if you look at even Malaysia, for example, the reason why the index is on the up because it's driven by certain stocks, right? So it's not like all stocks, right? It's not like in general, every single company is doing well, because that logically doesn't make sense. The economy contracted at a record pace on the second quarter. So that means from a financial result point of view, right? Malaysian companies and most of, for example, non-tech company in the US should be declaring a horrible second and third quarter, right? Because the economy basically went to a standstill.
Yeah.
Right? But yet, for example, if you look at the index, because the index is driven by, a couple of, key stocks, and therefore you are seeing an increase, right? So, for example, the best performing stocks in Malaysia right now, and you are talking about 2,000%, right? It's healthcare and glove related, right? So Malaysia is pretty good at only a couple of things. So palm oil and gloves and condoms, right? So these three are like, what Malaysia, do best, right? So, it's largely driven by that, but the sentiment is definitely very strong. So, for example, when I made the prediction that we're going to have a stock market bull run back in March and April, and that was during the height of COVID here at least, and Singapore haven't even entered circuit breaker at that point of time. I told people that I think in the next 2 to 3 years that if people can easily make 200 to 300% return of stocks. And people were laughing at me simply because, what the hell do you property guy know anything about stocks? But today, as a client texted me like just a couple of days ago, you have a bunch of kids who can't even spell the stock right, making 300% return, and making 100% return look, 100% only. It's like, what? 100%, oh my God, you're so, so kesian. But this wasn't the scenario 4 to 5 months ago, right? So the sentiment can quickly change, and I think and truth to be told, I've been always saying this, right? And I've been doing a lot of public webinars to allay the fears. I always told people that I think Malaysia and Singapore is quite well positioned to actually get out from this recession. First top 20 countries in the world, I think Malaysia and Singapore will be out of the recession simply because we take the virus a lot more seriously, very early. We contain the economy quite quickly, and then we actually put in quite drastic, right, help towards the people. So therefore, we don't feel the pressure as a local citizen, right? We're actually quite comfortable, but you can't say the same if you're in the Philippines. You can't say the same if you're in Thailand. You can't say the same if you're in Indonesia. There's a daily unrest going on in multiple of these countries, and places like India, simply because there's a question: if I go out, I could die because of the virus. If I don't go out and earn a living, I could die 4 days later from starvation. Right?
That's right.
So our economies are smaller, easier to manage, and I think both government has actually done very, very well. And therefore, similarly to markets like New Zealand, I'm quite optimistic, because at the end of the day, you have this, trillions of dollars, right, being printed everywhere. This money has got to go somewhere. And right now, a lot of this money are looking at emerging markets, and the emerging markets that will stand to benefit the most are going to be the countries that got out from COVID-19 earliest. Right. So fingers crossed, I'm praying both Malaysia and Singapore, I hope we both do well. I hope we both survive this. And by the time 2021 comes in, well, most of these foreign investments, we'll be looking at these two countries. And, as a result, you create more employment, right? You create more employment.
Are you predicting a crash? Okay. Based on what FAIZUL is saying, right, I personally have confidence in Singapore. Frankly speaking, I do not know so much about Malaysia, and I do not want to sugarcoat it as well. But this is my first stock idea number one. Since all of you guys are here, How many of you want some top ideas? If you want, please type me, and also do help us click the share button so more people can get this idea.
Yes,
But
please
it's
share.
up to you to discern and see whether it makes sense. It's up to you. Now, let me show you the stock idea, but I like to explain why. And it's very pretty aligned with what FAIZUL mentioned. Now, this is what is happening to Dow Jones. They have recovered since actually today back to the last year's level. Okay, this shows people's confidence in saying that, well, we will tie through COVID. Sooner or later, the economy will recover. Is that true? In my opinion, yes. How long will it take? I'm not sure. Okay, but you can see that they have already accounted for the fact that the economy will recover, but they have not recovered yet. So the economy has to recover in order to justify this price level. This is for Dow Jones. For the tech market, QQQ, which is most of the tech stocks, they have already superseded last year, and it is pretty well justified, I would say, but on the high side. Now, for Malaysia, this is Malaysia's ETF. You can see that Malaysia has also recovered back to near last year's, I would say, levels, also indicating that, well, they already predicted or say that accounted for the fact that we will recover. Now, there's this particular cute country called Singapore. Wow, I can show this, but this also shows a bit of Singaporean mindset. This is Singapore ETF, ticker symbol EWS. If you look at the stock movement, Singapore is far from recovery. Can you see? Last year, it went up to as high as 25. Now it's less than 20. So there is still another, let's say, $5 upside or even more for Singapore to start believing that we can recover. But I can tell you this, Singaporean, we are a little bit more, I don't know what's the word to use. I mean, it's not a negative thing. Probably we are a little bit more, I would say, hard fact, logic. You tell me, you show me that it's recovering, then I believe, then I'll start investing. So you can see, yes, we bounce back up a little bit, but there's still a lagging, there's still a lag. But if you guys actually do believe that couple of months later, or maybe 1 year later, or 1.5 years later, there will be recovery to the point that we will be better than last time. I mean, how many of you believe that the future, let's say Singapore, because this is a Singapore ETF, right, representing Singapore's economy, how many of you believe 5 years later, right, I give a time frame of 5 years. I know it's super long, okay? 5 years later, Singapore will recover to at least last year's standard, at least, or even higher. If you believe, can you please type 5? Now, I truly believe in that. I think it will take maybe 1.5 years, 2 years, because we are already doing a lot. So you can see there's an upside. There's an upside. And this upside, Singapore is lagging now, which is a good news for people who want to invest. So this is a stock idea number one. It's not a recommendation, guys. It's just an idea. Disclaimer, personally, I invested into this because I believe in Singapore's economy. It is not easy, but I think so. Okay, what do our Malaysian friends think? So FAIZUL and FAIZUL, do you believe that Singapore... Okay,
Fantastic,
I think
fantastic.
FAIZUL...
Thanks, Sean.
Right.
Thanks.
Yeah?
That. Great. I just want to pick one question from somebody who is watching, Aja Guls. I hope I say it correctly, your name. This is for FAIZUL, right? Is there any win-win situation to handle property overhang in Malaysia? Yeah, that's the one. Thanks, Sean.
Oh, what's the meaning? Property overhang. This is new to me.
So Malaysia has got quite a fair bit of property overhang as of today. We have roughly about, if I understand the number, it's about 30 billion ringgit or 10 billion Sing dollars. So as you know, Malaysia is pretty big. Most of this overhang is basically residing in Johor Bahru, so which is very nearby Singapore. So Johor has got the highest number of overhang. And but here's the thing. So when you hear 30 billion of inventory unsold, you hear, oh my God, that's a bad thing. But let's dissect it a little bit further compared to just listening to the headline, right, of property oversupply. So in property market, whether it's Malaysia, Singapore, or anywhere in the world, I would say simplistically I can divide the property market into three markets. You got a high-end market, you got a mass market, property, and then you got a low end, right, which is meant for the B40 and the M40 and then the T20. The oversupply in Malaysia are basically limited to only the high end property.
Okay.
So if you are looking to buy high end today, that's where, for example, potentially you could be looking at a 40 to 50 to 60% discount.
Oops, is it hanging?
Okay.
No, it's okay.
Right.
Okay.
So to the question here,
overhang goes to oversupply.
right? So to answer the question, win-win, the developer has to be realistic because they did the product wrong, they studied wrongly, they didn't do enough market homework to the point whereby you have an overhang, right? So Singapore basically introduced this thing called the I think it's something like a unsold inventory tax, yes? And Malaysia today announced that we might want to introduce something similar, right? So with that, I foresee for the next 6 to 12 months, as the developer becomes more and more desperate, there's going to be a lot more deals to the point whereby even as a Singaporean, you can technically own a Malaysia property zero down. So Malaysian don't need to talk much, right? So I can even own property without paying a single cent. I get paid 100,000, right? And it's still cash flow positive. But I'm talking about now, it goes to the price point whereby the intrinsic value finally matches the selling price.
Right.
So to the point, it costs more for them to go and build this property of the same spec today compared to the price that they sell you. It's essentially you are selling it at the cost of goods being sold. And I know personally, there are a couple of developers doesn't mind taking a 5 to 10% hit on cost as long as they can get their cash flow going.
Makes sense.
So it's almost like a fire sale, is it? It's almost like a fire sale where they need the cash. I mean, not really fire sale, but they want the cash.
I mean, like at 55%, at 40% discount, it is technically a fire sale. If you are selling something at a lower cost that it costs you to build and maintain it for the last couple of years, that to me, by that definition, is already a fire sale. And it happens simply because the product was designed wrongly, the size was wrong, the price point was wrong, the target market was wrong. So the reason why, for example, Johor Bahru has got highest inventory because they sold those days to people who are from Singapore or China. Because why? They think as long as I sell to Singaporean, I can get waterfish people to go and pay 700,000 for a 400,000 apartment. So in Malaysia, we have this thing called the unsuspecting buyers, right? So I always have this rule, guys. If you're a Singaporean or any foreigner looking to buy in any market, please make sure you buy what the locals are buying. Never pay foreigner price, only pay local price.
Yep. Wow. So it's called what? Waterfish people. Oh, interesting term.
That means if you are completely new, you have no idea what's going on, and all you think is that because because in Singapore everything is just 800,000 Sing, and it's 2.4 million ringgit, and then suddenly you can buy a 500,000 ringgit condo in JB and you think it's cheap. But the reality is the local in JB are paying $500,000 for a landed property, not a small apartment.
That's right.
So you gotta buy what the locals are buying. So I've got clients who are working in Singapore. I've got clients who are Singaporeans and from Brunei and Middle East and whatnot. I always tell them, never buy things that the foreigners are buying. You buy what the locals are buying. That's where you're going to be safe because you can always exit to a local.
That's right.
I think that's a very powerful gold nugget. Buy what the locals are buying. For all of us who are foreigners, including myself, I think that's a gold nugget for tonight, guys. Sean, FAIZUL throw the fire sale into the property market idea. Is there such thing in the stocks or not? A fire sale in stocks. In other words, like we said, there is. Okay, how does it work in stocks?
No, actually, stock market and property market is similar. The only key difference in stock and property is stocks are basically more liquid. You can click and then own sell buy, and then very very quickly. Now, but because of that, I want to be very open and upfront with everybody. Because of that, it's very hard for people to make money in the stock market. Reason being, right, sometimes they cannot stick to the plan because it's too easy to sell. They buy a stock, the next day they change their mind, they sell. Whereas if they do homework, they buy property, they need to think a bit more, they do due diligence. After they buy, they get so-called committed. You get what I'm saying? Yes. And because of the fact they get committed, right, when we talk about investment, time is a friend of a good investment. Okay? That's why in stock market, a lot of people, they forego the time. They want to make money very quickly. They quickly sell. Then in the end, they lose out opportunity or they reach their plan. So sometimes I see a lot of my friends. I'm the so-called the stock investor, right? A lot of friends around me. In fact, a lot of them, they buy, or rather they make more money from property because they get so-called committed into property. They have no choice. Now, stocks, there's fire sale. You have to do your valuation. Someone asked me what's intrinsic value. Later, I'll show some more stock ideas. How many of you want more stock ideas, type ideas? There are some that's very interesting. Now,
I think what you just shared is what you just shared, Sean, is like hitting me directly, because I started with properties, right? With Olivia and myself, my wife. After graduating in the uni here in Malaysia, we started with properties. And you are absolutely right in terms of the psychology, because we took our property investment more seriously than what I'm trying to do now with value investment. I'm like one of your students. I'm a Buffett online school kind of thing, right? And because of the property commitment was different, right? And we managed to, with 10 properties, we make our first million in Malaysia, just with 10 properties. So, but you are right. It was that commitment, when you like FAIZUL, when we go to a show house, we'll go 10 times, we'll go 20 times, we'll check everything that we need to check. And recently, compared to my stock investment recently, right, I had some shares of Disney because I follow your guys' advice. The moment I saw a 10% increase, stuff like that, I quickly took the profit and chabut and left.
You brother. Okay. So it is very true, and
it's very true.
In fact,
Very true.
Okay, the advantage of stock market. So the disadvantage of stock market is actually the advantage of stock market. The advantage of stock market is you can start small, you can buy fast, you can sell fast, which is actually the disadvantage. Because you start small, you can buy fast, sell fast, you are not so serious. Whereas for property, you do more, and then that's where you realize that you stick to the plan. So someone mentioned committed to game plan, right? So true, or some people say true. Okay, hey, I got another additional thing, because I just now I saw one of the participants. He or she says that I'm a Japanese. Okay, I think this is interesting. And this is related to a property. So I'm just going to shoot this bullet. Okay, I'm not saying bullet, but will the landscape of property investing change? Now, what do I mean? Because I read a news about Japan, and I think that this trend may affect the rest of the world also. Now, in Japan, right, there's this particular trend that people are leaving Tokyo. Why are they leaving Tokyo? You know Tokyo is a capital, right? So that's where the property prices are the most expensive. But now, because of COVID, people are learning how to work from home. And therefore, they realize, hey, if I can work from home, why I don't stay in Tokyo for what? It's so stressful. The property is so small. So they are leaving Tokyo, creating a certain emptiness in Tokyo's property. I mean, it's starting only now. By the way, it's just a theory. People are seeing a certain trend. Now, do you think this will also affect the rest of the world? Because we know that property is also based on real demand and real supply. At least this is what I think. Okay, there must be real demand. So, do you think it will affect? Okay, I don't know about Singapore. Singapore, that you walk here, walk there, he's still in Singapore. But do you think, like, for example, KL, will people say, hey, I don't want to stay in KL, I want to go Subang, or no, not Subang. I want to go Sabah, where I'm near the mountains, can have work-life balance. Will that happen? I know it's just imagination and speculation, but I'm just interested to hear what y'all will say.
Okay, so what do you think?
Have you heard of
this? I'm going into farming, the one for sure.
Yes, I've been a student of a lot of international real estate market, and Japan is a market that really fascinated. Basically, I'm very fascinated by the Japan market because it's the only market that has got no property bull run in the last 20 years.
Oh yes.
Right. So it's a market that has got zero property, because in property and people who are trying to push property, we always a property should go up in value, right? So over time, that's the story of why you should invest in property. Any dumb guy buy something 20 years ago will make money out of property, right? So that's the most common thing you hear out of property, right? And that's the reason why, for example, people tend to, after making money from stocks, and they feel a little bit, people like Paket, after you took your 10-20% gains, you will actually end up putting in more, what you think is a more stable long-term asset, right? Because you have no idea what, for example, Disney is going to be 5 years from now, right? So now Japan is fascinating simply because the macro view basically points out there's no way a Japan property market will have a property bull run, which also means there's a lot of similarity between Japan and Singapore, which is why I have not such a good news for Singapore property owners, simply because the reason why Japan don't have a property bull run because of the average age.
Right.
So if you look at the average age of Japan as of today, it's about 46. At 46, at that point of your life, right? I don't know how old you are, Sean, right? At 46, right?
18 years old.
You would, you tend to be a lot less aggressive. Number one. Number two, you would already own a property. That means your property ownership is done, right? And you are not at a stage where you want to take on more debt.
Right.
So investment is not something that you're going to be looking at. So the not so good news here is that because I also studied Singapore.
Yes, please let me know.
And the Singapore average age as of today is 42. Right? And here's the other kicker for Singapore property market, right? Property ownership rate as of today in Singapore, because the government has done such a fantastic job, is actually 91 to 92%. So suffice to say, people have reached to the age whereby property buying is no longer a need, coupled with 91% of average property ownership in the last couple of years.
Right.
So these are data from Singapore, I think Department of Statistics. So I got it officially from Singapore, not by some Malaysian publication, right? So you can suspect the legitimacy of the data. This comes from Singapore. Right? So you know, in Malaysia we can fabricate a couple of things, right? So but this is coming from Singapore, so I know my data is good, right? So therefore, the only likelihood of a property bull run coming to Singapore is that there's only two ways it can happen. Number one here is that there's a drastic reduction of interest rate, which is already happening as of today. Right? Your borrowing cost goes down by quite a fair bit. Number two here is that you import a bunch of people. Okay, you import a bunch of people who could basically buy, right? You could basically buy existing inventory from existing owners. Right? So I'm not doing this research to basically downplay the prospects of Singapore properties. No, for me, look, I'm just a student of the market. I think Malaysia has got one good property bull run before we call it a day. I think the next money within the region will be on younger markets like Indonesia or Vietnam, whereby, you know, property ownership is less than 30%. Interest is super expensive and it will only go down over time. And on top of that, right, you've got a population which is less than 25 years old average. Those are macro things that long-term wise, you know, right, you know, it's going to be, Malaysia cannot beat Indonesia, it cannot beat Vietnam, you know, in terms of property prospect over the next 20 to 30 years. For the next 10 years, we can fight, maybe. But similarly, and why Singapore will remain popular, Singapore is a bit like Hong Kong, whereby it is driven by external demand. So, for example, Hong Kong has got similar problems like Singapore, but where is the external demand coming from? China.
Correct.
So every single entrepreneur, wealthy person in China who has made it, dream to buy a property in Hong Kong. So it's like a status symbol.
Actually, you pointed a very interesting point. Now that you mentioned Hong Kong, right? Actually, a lot of people from Hong Kong wants to come Singapore now because of the situation in Hong Kong. So that may be I don't know how to measure that, but it's a possibility that you come in. But I think our Singapore government's direction, they do not want property price to increase too much. They don't want it to go down, otherwise people are angry. But if it goes up more, right, people will be angrier. So they are a bit in a limbo. They have cooling measures to like flatten the curve. So I really like your point, FAIZUL. I tell you why. Because I've heard over and over again, a lot of people, okay, maybe real estate agents in Singapore, they tell, oh, sure, you buy, sure, go up one. But go up based on what? Past data does not equate to future, correct? The past data, there's certain logic and principle. The principle is no longer there. So I think it's a hit right into the near. It's very important, right?
So, I mean, similarly, how you look at companies, right? You want to look at, for example, if you are buying a company that produces food, right? What is the cost of goods? What is the number of, livestock production, in the next couple of years? And what's the consumption, right? So similarly, if you look at Singapore, whereby every 2% who got married, they produce 1 children, that's the average today, compared to 30 years ago, 3 children. So from a net population growth point of view, it's going to be negative. So it's a problem, which is why the government has got no choice. But I guess to call in foreign talent to continue to maintain Singapore position, as the hub, right? Because there's just not sufficient talent internally. So I think it's a hard call. So there's no right or wrong. It's a matter of policy making, right? For Malaysia, it's a bit more of a free market because, the population is still relatively quite young. and property market is one of the biggest sector, and we still have plenty of land. So there's no real social problem, right? So by building more properties, encouraging foreigners to come back to Malaysia, there's no social problem being built in Malaysia, but in Singapore there will be, right? Such problems simply because the land is just so limited. Which is why I think the Iskandar play is very interesting, except that 99.99% of the people who buy Iskandar got the timing completely wrong. It's not going to happen now.
Wow.
It's not going to happen the next 5 years. It will happen 2030 to 2035.
Ouch, ouch. Okay, so,
So,
this
Faizul,
is pretty technical.
talking about this, right? Because of I'm a bit concerned about timing now.
Right.
Can you sum up, let's say, like the magic number 7 criterias of for people who are considering properties? What could be the 7 criterias when you look into properties?
Wow.
Hang on, 7 criteria. Okay, my criteria is very lengthy. So similarly to how, like, our Sifu Warren Buffett looks at, buying companies, right? So we have our 7 criteria to basically guide us. So let me just quickly, share my screen here.
Sure.
Guys, you notice, right? Faizul is a property guy, but yet one of his main gurus and principles that he is using is still Warren Buffett. So you have one property guy here, and you have a stock guy here who has the same guru up there, which is Warren Buffett. So this is a very cool combination. Okay.
Interesting.
So we have these 7 criteria, right? So basically we benchmark new property versus old, and then we have this thing called median, right? So median is a very interesting theory. So if you look at the stock market point of view, the way you decide median is the average PE in that particular industry. For example, if it's a tech, there's a certain PE, right? Ratio that you basically, below certain PE is a buy call, and above certain PE, okay, it becomes a premium, and you are basically selling a growth story. So similarly for property, we have this thing called the median price point, or what's the average price point that people are willing to pay. So if you buy below median price point, so that means within that area, for example, of Mont Kiara or KLCC, more than 50% of the people who are buying are okay to pay above what we are paying. So we want to pay a median and below, right? So boosters are basically what is the new infrastructure story that will come to the area that will help increase property value. So similarly to stock, right? So for example, if you look at Facebook or Tencent, right? What is the growth story, right? So what companies are they buying? What technology are they acquiring that will help increase, usability, revenue, profit, etc. So like I said, I'm a proud copycat of Warren Buffett. I am not shy to say I'm not that smart to figure this out on my own. I literally took most of his concept in terms of equity investment and I applied it to property because, well, if the guy became, the 4th, 5th richest person in the world applying this principle in stocks, I think, I don't think I can go wrong. I mean, the guy has done it for what, 70 years now? So I'd rather go with something which is proven and tested rather than, trying to, try to come out something and say that, I created it just because it looks cool. So therefore, I'm not shy to say that I took it from him. And the last thing I want to say here is that the last point is MRO, right? And especially, this is especially important for people who are, let's say, for example, looking to buy in KL, but you're not in KL per se. You could be working in Singapore, or JB, or Middle East, or even from Japan. Is this idea called multiple rental option, right? So when you buy a property, do you have a, plan A, plan B, plan C, plan D to rent? Because, some people buy resort homes, let's say, for example, in Malacca, and your only game plan is to rent to people who are, coming in for tourism, right? So what happens today when the borders are closed?
Yep.
Right? So that plan is completely wrecked, right? So we want to buy things whereby there's sufficient job creation, there's enough, tourism, there's enough demand from tourism, there's enough demand from the local workers, there's enough demand from people who are single and, recently starting their employment. That's why we don't buy high-end, we tend to buy below median, we try to buy mass market property. And lastly, we want to buy things that the locals are buying simply because at the end of the day, most likely when you want to exit any property in Malaysia, if you try to sell to another foreigner, As you know, Malaysia, unlike Singapore, is not really an international property playground right now for most of the global investors. So therefore, chances are 99% of the time you have to sell to a local. So you got to buy what the locals are buying, and you don't buy foreigner stuff. So I hope I shed some light here in terms of, I can spend, it took me half an hour to explain all of these rules in my webinars, right? So I give it for free. In my group called the FAIZUL RIDZUAN private group. It's free. Just join it. In fact, there's a word that says free, right? So just go look for it in Facebook. Sorry?
What is the group again?
FAIZUL RIDZUAN private group. So I've got about 55,000 members now who basically came and learned from me for free during PKP. So I elaborate and explain all the rules in detail in my group. So, go join there, learn for free, understand a little bit about Malaysia property market. Don't simply buy with the idea of, just simply buy property value should go up one. That's the dumbest thing you can do today.
Yes.
Sorry
guys,
for being,
join the group. Yep.
Oh, lovely. Guys, I saw the link. I'm just gonna like post it up there. In fact, you all can search for the group. You all can search for the group. Is this one, right?
Correct. Yes, that's the one. Yep.
Okay. So search for this particular group and then join. I'm going to join now. Okay, great. So one thing I really like is I would say that you're no fluff guy lah. I think very fundamental. Go for the Buffett way of investing, which I like a lot. Oh, okay, great. Okay, there's a link here. Okay, great. So now I'm going to talk about my game plan for the next this year. And interestingly, I also take reference from Warren Buffett. Okay, let me just share with you guys, right? In 2020, after COVID happened, right, Buffett only buy 3 stocks pretty heavily. Okay, so these are the 3 stocks. I'm just going to go and share with you guys. BAC, which is Bank of America, D, which is Domino Energy, and GOLD, which is gold mining company. Let me explain to you how you can take advantage of this as well and how to go in. Although I did mention to you, market is a bit high, correct? So I'll go in carefully. Personally, I use options, and probably I won't have time to actually go too much into options. But if you are interested to learn more about options, I do have this free class that talks about it. It's like a preview, but I will share a lot about options. But let me share with you how this 3 thing works. Now, BAC is actually bank. If you look at bank right now, right, they are not in very good shape. Okay, so just now someone actually asked about healthcare. Healthcare has already recovered. Most of the stocks has recovered to pre-COVID, I would say, levels. But let me show you banks. This is a bank ETF. Now, why do I talk about ETF? It is very useful for beginners to buy this instead of picking individual stocks. So I don't know whether this sounds correct. You all can correct me if I don't sound correct. So example, you feel that KL is a good place to buy property, but you don't know exactly which property to choose, which facing to choose, but you believe overall that KL's property price will increase. Example, you can buy a KL, all the properties, you form a trust and buy together. Now, for stocks, this is called ETF. Like you think that bank can improve, but you don't know which one to buy, you can buy a bank ETF. So this particular bank ETF is called KRE. It's another stock idea, which personally, I will also enter into this, and let me explain to you why. I don't have time to go into valuation, but valuation-wise, it is actually considered cheap. If you look at price to book value, please study a bit more about this. But again, you look at the stock price. Now, you see the stock prices of bank overall has not recovered to pre-COVID stage. But think about it this way. The overall general US market has gone up. Like what FAIZUL mentioned, some bigger stocks has been pushing the stock market out. But this also goes to show that people have confidence that they will improve. Will banks subsequently improve? I believe so. Now, just now I mentioned 5 years, right? I'm just being very exaggerated and also very prudent. But it won't be 5 years recovery, in my opinion. We don't know what will happen. But you can see, again, there's upside for banks. $20 upside. So $40 now, right? They can reach maybe near $60, which is a 50% upside. This is my opinion. So, and Warren Buffett did invest into banks. He sold away some, but he invests quite a bit into Bank of America for certain purposes. Okay, so this is one idea that you can possibly look into. I do hope this is useful. And before I pass back to FAIZUL, maybe I just share one more key thing. Now, I told you correct. Warren Buffett bought banks, bought mining company, gold mining company, and bought a energy company. Now, why? Why is he focusing on these three? Let me share with you some insights. Okay, if you look at this thing, right, let me just click the next thing. You can see, right, this table explains to you when dollar means US dollar, when the value of dollar increases, how it affects the sector. Now, when dollar increases, most of the sectors you can see increase by 3%, 3%. Like financials, for example, banking, whether dollar increase in value or decrease in value, there's not much difference. You can see there's not much difference. But there's two particular sector, right? It's affected by dollar value. Dollar value currently, what do you guys think? Do you think dollar is worth more or will be worth more or worth less? Will go up or go down for dollar, US dollar? You must understand, they have been printing like crazy. Like what FAIZUL mentioned, they print like crazy. So very logically, dollar will fall. And when it falls, right, it actually benefits two industry, materials and energy. There's a reason behind it. It's not just a number. I won't go right into it. You can see this is what Warren Buffett is investing in. Gold, which is material, and energy, domino energy. So you can look into these two possible sectors if you believe that the dollar will continue to fall. This is one thing I do. And obviously for me, because stock market is high, I use more options so that I can commit less capital. I keep a lot of cash right now. I commit less capital, but if market goes up, I make same amount of money. If market goes down, I do not lock in a lot of capital. I still got a lot of capital to actually play the game. So my gameplay, I summarize my playbook for the rest of the year. I'll be looking at banks, looking at sectors that will be affected by dollar dropping. So these two key things, and also looking at Singapore as an ETF, right? So this is my gameplay.
Very powerful. Guys, pay attention that Sean mentioned the word options a couple of times. From my own observation in the market, when I've talked to friends, I realize I might be wrong, but I noticed that about probably 90% of people, they know about stocks, buy low, sell high, but I think more than 90% of people, they are not familiar with options, okay?
Yes.
And I hope later probably we have a link somewhere.
Oh yeah. Later, maybe I'll invite them to another
I've been in Malaysia, guys, for 27 years. Before social media, I used to see all these advertisements about options in newspapers in the days. I'm already 45. You can see I have white hair already. But then I always ignore because I always join the community, I join Sean and the gang. Then I understand the power of options. Okay, it's so powerful. Always knowledge is powerful and applied. So later on, I hope we have some links from Sean's side and Sean's team that you can learn more about this stuff, because it really change your investment portfolio. It's very powerful. Now, back to my Malaysian friend FAIZUL. Now, what do we have here? FAIZUL, is there a better way? Is there a better way to debt consolidation in the housing market? I don't know. FAIZUL, is there something you want to pick up or not? I think I find it interesting comment there.
Come again?
Do you see this? That is the one. Dr. Das Thomas. Is there a better way to debt consolidation in the housing market?
I don't think I understand what the question actually means. In fact, I'm supposed to do my private webinar at 10 o'clock talking about debt consolidation.
Is that talking about like refinancing or what? I'm not too sure.
That's personal debt consolidation. So if you're talking about debt consolidation in the housing market, so I don't think I understand what it really means.
Oh, but by the way, FAIZUL, I think you are doing another session. I sign up. You are doing another session on that after this, right?
Yes. So that's going to be talking about that. Yeah.
Okay, we got 2 minutes.
So it's going to be after this. Is it at the private group? Is it in the private group?
Yes, it is. Yes.
So guys, FAIZUL is going to have. I just saw it. That's why I shared. I saw it and I signed up. So, what's the topic, FAIZUL? I forgot. Debt.
We're going to talk about how to manage that, because the moratorium for Malaysians is going to be over next month. So I think we have a civic duty to really help out as many people as possible to really teach them about that. Because recently we have cases of people committing suicide because of the pressure of debt, and pilot became jobless, and because of that, and they committed suicide because they don't see a way out. So I think it's important for us to do whatever we can to educate the public, and that is not something that you should. It's not the end of the world,
Yep.
right? So we are going to be teaching for free tonight, and we're going to cover extensively about that and what can you do to manipulate that, right? Since you have people who are like me who have $10 million of debt, but I sleep well at night, because my debts are manageable, right? So that is not something that you should be fear of, but you should learn how to manage it and of course then manipulate it, to your advantage.
Very interesting. So guys, you want to know more about that? Immediately after this, join FAIZUL's group, the private group, and then you'll have a free session for us later on. Most probably I'll be there as well. Sean, where is the link for our friends here who wants to know more about stocks and options? Can they register somewhere?
Okay.
Now?
So we have to close this session already, right? Now, I saw a lot of questions about stocks. If you want to know more about stocks, I do have this group called Next Level All Star. We actually teach all the stock ideas and how to actually analyze stocks. But if you want to know about options, we do not teach inside this group, right? Because it is a little bit too advanced. So do join this group to learn more about stocks. And for the friends here, for those, especially those who attend OMI, how many of you attended OMI before? If you attended OMI, can you please type OMI also share if you find it useful? Let me just share the link, okay, of how we can invite you guys to our options workshop.
Yeah.
Or why am I back to Singapore?
That'll be good.
Wait, let me just check. Okay, we do have two links, correct? For those who want to. Okay, I'm just going to post here. Okay, this is the form here. Okay, there's this particular form I've typed into the comment. You can actually join this particular link. Fill in this link so they can come for a workshop talking about how to invest in options. Actually, tomorrow there's a session. So we have a couple of sessions. It's like a normal preview, but we share a lot during this session. So for those who want to learn about options, you can type options and then go to the link and also share. I'm gonna just put the link inside the post as well. Okay.
Yeah, fantastic. So guys, let's go to the link, open a new window and keep it there while we wrap up the session. So this is for Sean's preview, right, on stocks and options. It's a very, very powerful session. Yeah, it's very powerful. And FAIZUL, my dear friend, can we have your link as well for our friends who wants to know more about the property investment?
Sure. I mean, the private group is there, but if you don't mind, I'd like to take 2 minutes to really wrap up what is my strategy for the next 5 years.
Why not? That'll be great.
Right, I think people should know. So I mean, especially people who are watching, they might get a little bit too excited. I don't want them to do that because this is where rational mind should prevail. So I think the strategy for the next 5 years, like I said, you want to spare cash, save your cash to buy equities, because I think that's where the opportunity in the short to medium term is going to be for the next 1 to 2 years, right? So you use as little cash as possible to buy properties in Malaysia. So that's how I would play it, and that's exactly what I'm doing as of today, right? So the benefit of not using any cash to go and buy it, especially if you are a foreign investor here, is that you don't have any forex risk, because you tend to lose whenever you exchange Singapore dollar, US dollars to ringgit. But if you are basically borrowing 100% in local currency, you don't have that risk anymore. All right. Then always bear in mind, when you buy something, just make sure that your rental yield is sufficient, and your rental yield must be above 5% for Malaysia property. Bear in mind that every 400 ringgit positive cash flow out of your property means, under the new normal of the new regime of low interest rate, you should be able to make about 100,000 of equity or capital gains, right? So, for example, if your property makes 2,000 ringgit per month positive cash flow, then you're looking at 500,000 capital gains. So this is very similar to a PE ratio, right? If your PE ratio today is 5 and you are in the tech sector and everyone else is trading at 30 times PE, so naturally, you've got to have that upside. So similarly, we look at properties exactly the same way, right? So the third point here is that you must hedge against tax, because I think this is going to be the era whereby, the rich is going to be taxed like crazy. Right, and therefore, if you are buying on paper at 1 million ringgit and you're getting a 50% discount, so basically your first 500,000 ringgit of profit will be tax free, because on paper you're actually buying the property at 1 million. your discount is not disclosed, you see. And then lastly, Malaysia, right now, the government is encouraging people to spend money and buy property, and therefore, basically to buy property in Malaysia, the cost is almost zero because you don't pay stamp duty because it's waived, even the transfer of title is waived. And those things typically cost 5 to 6%, similar to an ABSD in Singapore. Right? So to buy a R1 million property in Malaysia, you could buy, well, almost a zero cash. And of course, for me, we do bulk purchase, right? We are the largest group in Malaysia today. These are the properties that we are buying. If you remember just now, I said anything above 5% rental yield. Everything that we are buying today is 8, 9, 7, 6% rental yield onwards, right? So we grade it as a grade A, grade B.
Guys, have a look at this. This is how this guy plays his game. This is powerful. Okay, just pay attention to this part.
Right. So as long as you buy property with decent fundamentals, you have multiple rental options, your cash flow is covered, then I don't think you have to worry so much, especially when you don't have to you don't actually have to spend money in Malaysia to go about and do it. And being for example, a Malaysian working in Singapore, Singaporeans buying Malaysia property, there's always going to be a special relationship whereby you are able to obtain, well, sometimes 100% loan, sometimes more than 100% loan. So if you're interested to join us in our bulk purchase, attend our preview program called, SEAH, I think my team is going to share with you guys the link. The next one will be, I think, either this Friday or next week. So looking forward to see you guys there.
Wow, amazing, amazing.
Amazing, really amazing, guys. So, yeah, while waiting for the link, guys, one more question, Faizal, which also is Faizul, sorry, on this, somebody also typed it there, right? Residential, commercial. What is your take on it looking at the market? This is the one. Yeah, thank you, Sean.
You gotta buy residential because thanks to COVID, the landscape or the consumption of commercial property will be completely different, and we have no idea how things are going to turn out, right? So, I like to watch this series called Billions. Only suckers bet on things they're not sure about the outcome. I've seen of commercial property in Malaysia giving 6 months zero rental. I've never seen a residential property in Malaysia give you 6 months zero rental. I will not see in Singapore. I will not see in Malaysia. Only in Japan, where a lot of people are dying. So government are actually paying you money to go and acquire a property in Japan. So that's interesting. That's a different story for another day.
I love it. Buy what the locals buy because they really have local knowledge. Local knowledge is very powerful. It's very powerful.
I wouldn't pretend, to go to Singapore and say I know better than anyone out there in Singapore. But in Malaysia, I think we have a pretty good grasp in terms of what people want to consume, and we tend to buy mass market and below. So these are your regular 5,000, 6,000 salaries. These are the things that they're going to consume. So these are the properties that we are buying, and this segment is not going to diminish anytime soon.
Right. Totally agree. Wow, amazing session. I wish we can spend another 1 hour. Okay,
so round two, great. So there's more demand. So who wants to see round two, guys?
Round two.
Yeah, exactly. So guys, please take full opportunity of the links given. So please sign up for both. You have nothing to lose and everything to gain. I'm a living testimony of benefiting from both, from properties, also from value investment. All right. I not claim to be a guru or an expert, but hey, we are making good money. We're making good money. Thank God for that. So, Faizul, do I get to see your link? Anyone posted the link for your site?
Okay, yes.
I think Sean did, yes.
Oh, okay. He's there. Okay, great. So, guys, you have Faizul's link there. You have Sean's link. So, quickly sign up for those, and then, okay, he's there. Great. So, yeah, I think Faizul definitely needs to run for his second session. He's probably late already.
Yep. I've enjoyed this session tremendously as usual. Damn good questions. So I really enjoyed being able to share.
Thank you so much. Thank you for joining us, Faizul. We'll definitely do another round.
All right.
Cheers. Thank you.
Bye-bye.
Bye, guys.
All right.